Hello friends, I am P. Sujatha, Assistant Professor, PG and Research Department of Economics, A.D.M. College for Women, Nagapattinam. Now, I explain the concept of Indian economic development. In this module, I explain the national income. What is national income? National income is a measure of total volume of goods and services produced by an economy over the period of time, normally a year. Commonly, national income is called gross national product or national dividend. So, according to Bigu, national income is that part of the objective income of the community, including, of course, income derived from abroad, which can be measured in money. According to Fisher, the national dividend of income consists solely of services as received by ultimate consumers, whether from their material or human environments. From the modern point of view, Simon Husnet has defined national income as the net output of commodities and services flowing during the year from the country productive system in the hands of ultimate consumers. Then, what are the various terms associated with the measuring of national income? First, what is gross national product? So, it is also called as GNP. Gross national product is defined as the total market volume of all final goods and services produced in a year. Two things must be noted in regard to gross national product. First, it measures the market volume of annual output. In other words, the gross national product is a monetary measure. How to measure GNP? GNP equal to C plus I plus G plus X minus M plus NFIA. C means consumption, I investment plus government expenditure, X minus M equal to export minus import. Then NFIA means net factor income from abroad. GNP at a factor price. So, what is GNP at a factor price? It is a sum of money value of income produced by and occurring to the various factors of production in 1 year in a country. Next one, what is gross domestic product? The gross domestic product is a total volume of output of goods and services produced by the factors of production within the geographical boundaries of the country. So, GDP equal to GNP minus net foreign investment. What is net foreign investment? It is nothing but it is a export minus import. Then next one is net national product. So, what is net national product? The GDP includes the volume of total output of consumption goods and investment goods. The word net refers to the exclusion of that part of total output which represent depreciation. So, what is net national product? It is gross national product minus depreciation. Then, what is net national product at market price? Net national product at market price is a net volume of final goods and service evaluated at market price in the course of 1 year in the country. So, NNP at market price equal to GNP at market price minus depreciation. Next, NNP at factor price. So, what is NNP at factor price? It is a net output evaluated at factor prices. It includes income earned by factors of production through participation in the production process such as wages, salaries, rate, profit, etc. So, it is also called as national income. So, what is net national product at factor price? So, it net national product at market price minus indirect tax plus subsidies. Then GDP at market price minus depreciation minus indirect taxes plus subsidies. So, it is also called as national income. Next concept, net domestic product. So, what is net domestic product? It is a part of gross domestic product, and net domestic product is obtained from the gross domestic product by deducting the quantum of tear and wear expenses, that is net domestic product equal to gross domestic product minus depreciation. Then next explain what is private income and what is personal income. The private income is the income obtained by private individual from any source, productive or otherwise, and retained income of corporations. It can be arrived at from NNP at factor price by marking certain additions and deductions. So then what is private income? The private income equal to national income minus undistributed corporate profits minus profit taxes minus social security contributions. Then add transfer payment, interest on public debt, then reduce social security profit and surpluses of public undertakings. It is called as private income. Then next one is personal income. Personal income equal to private income minus undistributed corporate profit minus profit taxes. So what is disposable income? What is per capita income? The disposable income equal to personal income minus direct taxes. So disposable income can either be consumed or saved. Therefore, disposable income equal to consumption plus savings. What is per capita income? The average income of the people of the country in a particular year is called per capita income for that year. For instance, in order to find out per capita income for 2001, how to calculate at current price? The national income of the country is divided by the population of the country in that year. So how to calculate? The per capita income for 2001 equal to national income for 2001 divided by population in 2001. So in this way you have to be calculate the per capita income. Then next one, what are the different methods of calculating national income? There are three methods to calculating national income. One is product method, another one is income method, and the third one is expenditure method. So the national income of the country can be computed by various methods. First one is the product method. In this case, the total volume of all the goods and services produced in the country is calculated during in financial year. The goods and services produced might be valued at market price or factor price, which means the wages or price paid to different factors of production. Only the final goods and services are included, not the intermediate goods and services that are left out. Second one method is the income method. Second one income method. Next slide. Income method, in this case the incomes and payment received by all the people in the country are calculated. Income received in the form of wages, interest, rate and profit by individual, business houses and the government, including the taxes and profits of government enterprises, are calculated and total. So in this way you have to be calculate the national income through income method. Third one method is expenditure method. The economy, one man expenditure is another man income. So and the sum total of expenditure measures the total income. We adding up the expenditure of all the people of consumer goods, investment and saving in order to arrive at the national income. The expenditure of not only individual but also of business houses and the government should be taken for the calculation of national income through the expenditure, investment and saving method. So these are the three methods are used to calculating the national income. And next to explain what are the difficulties and the limitation in the estimation of national income before independence. The estimations were prepared at the personal level and therefore suffered from serious biases. So what are the different difficulties? The different estimates of national income were made on the basis of different method and they were not prepared as per standard definition and the concept of national income. Thirdly, the most of the estimates were made on unscientific and unreliable data, and that too for the specific period only and for the specific geographical area only. Hence, comparative estimation were totally ruled out for these figures. The third one, the arbitrary assumption of author undermined the reliability of the estimates. Further, the most of the estimation was based on statistics from the agriculture sector, which were highly undependable due to the existence of different types of land tenure systems. However, one thing was common: the per capita income of the country was deliberately poor in all the estimates, and an individual could not get even a square meal a day except the richer classes. Then what are the different significance of national income estimates? There are various important uses of estimation of national income. There is great need for their regular preparation. So, what are the important uses of national income estimates? First, the national income estimate reveals the overall production performance of the country, as it seeks to measure the level of production in a country. The national income and the per capita income will indicate the level of economic welfare of the people of the country. Second, by comparing national income estimates over the period of time, we can know whether the economy is growing or stagnant or declined. Third, the national income estimate show the contributions made by the various sectors of the economy, such as agriculture, manufacturing, industries, trade to the national income. In the fourth place, the national income estimates throw the light on the distribution of national income among the different category of income, such as wages, profit, rent and interest. Fifth, with the help of national income estimates, the various countries of the world, we can compare the standard of living and the level of economic welfare of the people living in those countries. Next, commonly, what are the difficulties in the national income? First one is conceptual difficulties. In the first place, there has been a difference of opinion regarding the nation in the concept of national income. It is argued that the national income denotes income of the nations, such the income received by the nation living in foreign countries should be added within the income produced within the country. This problem is not solved. So, these are conceptual difficulties. Second one, existence of border system. Apart from the conceptual problem, the backward economies faces certain practical limitation in the calculation of national income. In the computation, it is assumed that the bulk of goods and services produced and exchanged for money, a well-developed marketing system in the economy could help to computation of national income. But in India, particularly in the agriculture sector, cultivation is carried mostly for the existence, and most of the produce not come to the market for sale. Either the produce is consumed by the producers themselves or exchanged for other goods, as a border system is very extensive in our villages. A good portion of the output in agriculture is likely to be ignored in the computation of national income. At present, there is no reliable method to find out the method of consumption at home and the extent of sale through the border system. The output of non-monetary sector present considerable difficulties in India. Third one is non-availability of reliable statistics. The statistics and income data are vital requirement in the computation of national income. In India, the serious problem is the non-availability of vital statistics and inadequacy of data. Even the little available of statistical information is not completely reliable. This is more so in the agricultural and small enterprises sector. Most of the producer and small entrepreneur are illiterate and ignorant, who carry on production on the very small scale at the family level without maintaining the accounts or having any idea of accounting. The absence of income figure, much guesswork inevitably enter into the assessment of income. Then moreover, the Indian peoples in villages are suspicious of tradition and do not cooperate in the calculation of data. Then fourth one is double counting. The absence of differentiation in the economic functioning in India, double counting is a difficulty associated in the calculation of national income. The product census method, the error of double counting may grip in all calculating while calculating national raw materials first and then the finished product and services rendered. The volume, so for example, the volume of iron and steel has entered twice in the national income statistics. First the iron and steel and indirectly through the volume of the bicycles. So the best way is calculating the volume of goods and services and enter into the final consumption. Fifth one is a transfer problem. So what is transfer problem? This is another difficulty arising in the calculation of national income. In the computational, through the income method, only net income has to be taken and not gross income. The income in the economy has been transferred from the company to the shareholder in the form of dividend and strictly speaking in the income of the company. Care should be taken to calculation the transfer amount as either the income of the individual or in the income of the company. So there is a problem of transfer problem to calculating national income. Next, then what are the causes for slow growth of national income in India? So what are the causes for slow growth? First one is growth of population. Population is an important determinant factor in economic growth of the country. The massive effect and huge investment toward the development are dissipated largely to feed the increasing population of India. The increasing in national income is eaten away by the progressive increase in population. Consequently, the growth in national income is either static or very slow. This problem, the need of effective reduction of population increase through the effective and efficient implementation of family limitation programs. Then second one is too much dependent on agriculture. The contribution of agriculture sector is very large, whereas the contribution of the industrial sector toward the national income is very poor. The excessive reliance on agriculture prevents quick rising the level of per capita income because agriculture is not organized on the commercial base in our country, but is treated as the way of life. High pressure in agriculture, inferior soil, inefficient cultivation and insufficient utilization, so like that would result in poor agricultural productivity. Consequently, quick and dynamic progress would not be recorded in the national output. Third one is the occupational sector. The occupational sector in India is also responsible for poor national output. The primary sector is supporting on unduly high proportion of the working force and the other sector are observing proportionally is a very poor percentage. This overcrowded in agriculture result in discussed unemployment and zero productivity. The need is to develop non-agricultural occupations and industries so that the excess working forces in agriculture could be observed and then level of productivity automatically raised. This divergence of working force primarily to other sector would increase the national output. Fourth one is investment and capital output ratio. The investment and capital output ratio in the economy decide the growth of national income. The investment rate of growth of national income, to achieve this, the rate of investment, that is how much of national income is set apart for investment in the economy for capital formation. It has to be stepped up and capital output ratio has to be reduced. During the first plan period, the investment of 8% of national income was made, and in the second plan, an investment of 12.7% was made, and the subsequent plan, it was ranging from 10% to 14%. This rate of investment is supported to be very poor, and it said that it is should exceed 20%. So next one is these are the various causes for slow growth of national income. Thank you.